Welcome back to Making Money Matter, ladies and gentlemen. My name is Kerry Stevenson. What a week in gold. Gold prices climbed past $23.59 on Tuesday after the data released by the US Department of Labor revealed factory gate inflation rose above estimates. And that demand from investors, including those central banks, remains high due to gold's safe haven qualities. The move from BRICS nations away from the US dollar as the medium for international trade has increased demand for gold as a possible replacement. That is the headline for our lead keynote at the 2024 Australian Gold Conference, Mr. Simon Hunt. In other news, Pantoro has raised $100 million to establish its third underground gold mine, and Iceni Gold Limited tripled its value on the ASX after their discovery at their 14-mile well project in Western Australia. In other news as well, Finnish scientists have developed technology for recycling solar panels with a byproduct of more gold being recycled. And in interesting news, mini gold bars are selling like hotcakes in Korea's convenience stores and vending machines. The ASX Gold Index up almost 3% for the week, and the price right now, $23.57 US or 3,559 Australian dollars. It is Wednesday, May the 15th, 2024. I'm Kerry Stevenson, that gold lady, founder of the Australian Gold Conference, 101 days and counting. Joining me today, the wonderful Rick Rule from the Rule Investment Media, and somewhere that I'll be going to in July, and that is for the Rule Investment Symposium at Boca Raton, Florida. And for all of you out there, I've said it before, I'll say it again. I want to see a contingent of Aussies out there. And I'm excited. I'll be speaking at the conference. And, excuse me, I'm a bit crook today. I've got the lurgy. Don't worry, Rick, you won't catch it. We're far enough away at the moment. But I'm pretty excited. Boca Raton, 7th to the 11th of July. And as I said, I'm thrilled to be helping on the Monday afternoon as your MC. And also lots and lots of attendees there. A lot of gold companies over there as well. So welcome to the Making Money Matter. Nice to see you again. This week, we're going to talk all about gold. Mr. Rule?
One of my favorite topics, Kerry, and all the better to talk about it with you. Thank you.
I was at a conference last week. It was quite interesting, Rick. It was the RIU Resources Roundup in Sydney. And it was interesting, the change from last year, where it was a lot of lithium, rare earths, and it felt like there was more interest in gold and more gold companies there. My question to you, my first question to you is, the Rule Investment Symposium, are you seeing that there's more of a shift over to precious metals in 2024 than there was in 23, or is it pretty much the same?
I think that shift occurred more last year.
Okay.
The conference, because I only admit companies to the conference that I own in my own portfolio, the shift in the conference exhibitors tend to reflect the shift in my own portfolios. My portfolio, as you know, last year was pretty gold-centric. I thought the gold stocks and the silver stocks were too cheap. There is a good range of gold companies in the conference, but there is sort of a balance. I would suggest that the only resource, ironically, that's underrepresented in my conference, despite the fact that it's probably my favorite commodity, is oil and gas.
Oh, yeah, that's true. Yeah.
A failing as a conference promoter, a failing of mine, not a failing of the industry. Certainly, if you look at the history of our conference, going back almost 30 years, it's been very gold-centric. And I think for most of those 30 years, the primary investee interest, while they'll say to you that they're agnostic, that they just want to make money, the truth is, if there was an underlying philosophy among the attendees at my conference, it would be very, very precious metal centric. Given that the attendees basically own the conference, what they ask me to do is more or less what I'm going to do.
Okay. Well, one of our speakers, Simon Hunt, who I know you know quite well and you have great respect for, he thinks that gold will be 50% more in 2030. I'm speaking to you in 2024, and as I said right at the start, currently the price is $23.57 US, and that's 3,500 Aussie. You got a view on the price, or?
Yeah, sure. Let's just do the arithmetic for fun.
Okay.
I think, and I may differ from other people, but I think the stated rate of inflation, which is to say the CPI at 2.7,
Yeah.
is a joke.
Yeah.
I think the deterioration of my purchasing power and your purchasing power,
Mhm.
if you add back things that the CPI misses, like tax, is more like 7.5% compounded. When I look at the basket of goods and services I consume, including things like food or fuel that the CPI doesn't seem to want, or tax, everyone's largest household expense, I would argue that the average working person in Australia and the United States is experiencing a deterioration in the purchasing power of their savings and wages that's more like 7.5% a year than 2.6 or 7. And I would urge the people listening to this interview to spend 2 or 3 hours and just do an informal calculation of what's happening to their own household budget. Look at what's happened to the price at the pump. Look at what happened to your rent. Look at what happened to your taxes, your property taxes, your income taxes. Look what happens at the checkout counter in the grocery store, and tell me that inflation is really 2.6 or 2.7%. If you agree with the number that I gave you, 7.5%, and you compound that 6 times for 6 years, in nominal dollars, Carrie, you get $3,000 very handily.
Wow.
The gold price doesn't have to go up in real terms
No.
to go up in nominal terms. You know what I'm saying?
Yeah.
Gold can have the same purchasing power in 2030 as it does today. And in nominal dollars, if I'm right about the deterioration of the purchasing power of the dollar, there's your $3,000. I've said this before in your show. I don't own gold because I think it's going to go from 2,376 to 2,514 or something like that. I own gold because I'm afraid it's going to go to 7,000 or 8,000 or $9,000.
Right.
That seems far-fetched over a decade where the real price is unchanged. But if you take gold back to the decade 2000 to 2010, the gold price went from 250 US dollars to $1,900, a 7-fold increase. My suspicion is that with the set of circumstances in front of us in the next 5 years, the next 10 years, that a tripling of the gold price certainly isn't out of the question. I'm not saying it's going to happen. I'm not saying that you put all of your net worth into gold stocks because
No.
they absolutely positively, without fail, are going to go up 3-fold. What I am saying is that there's a possibility and perhaps a probability, given the ongoing deterioration of the world's reserve currency, the US dollar, sorry to make it US centric, but it is,
No. Well,
that a tripling of the gold price, at least in nominal terms, in US dollar terms, is as likely as not to occur. If past is prologue, looking again at the decade of the 70s, a 7-fold increase in the gold price does a fairly interesting thing to the beta on the gold shares, ultimately.
ultimately. Yeah. And the interesting thing here is, Rick, as I speak to you today on May the 15th, we've just had the budget. The federal budget has been handed down last night, and they're going nuts. They're going nuts. They're big spending. They are splashing the cash in last night's budget. It's $300 off energy. It's taxes being like they literally ask, and they're saying, well, we've got a $9.3 billion surplus this year. But you know what? Next year, it's like a $24 billion deficit. So I just think the governments around the world are becoming a little bit more reckless. So they've been reckless for a little while, but they're becoming even more reckless with people's currency. I don't like to call it money because it's not money, is it, Rick? It's credit. And I think the US is guilty of this as well. Governments around the world, and I think the average middle class, or even those struggling even more, they're the ones that are really going to suffer. What's your view?
Well, what you say there is absolutely true. The circumstance in the United States that we're in, ostensibly this big government's supposed to benefit the poor, benefits me. Artificially low interest rates means And I think our rates are artificially low. I think if the Fed wasn't involved in interest rates, that you'd see them 300 basis points higher.
Wow.
Artificially low interest rates benefit guys with access to credit like me. People who can get 30-year commercial fixed mortgages at 7%, where my cost of capital stays fixed for 30 years, but I can increase rents. These government policies are pernicious. In fact, they hurt everyone. But somebody in my position has the ability to fight back.
Right.
People who don't have a background in finance and people who don't have access to capital and credit have no way to fight back. So what you say is exactly true, Carrie. And what you say is important for a different reason. When I look back further to when I came into business, which is to say 1970, the hallmarks of inflation were already in place in 1970. In the United States, going back all the way to 1967, you could see, and I was in high school and I could see, that inflation was going to be a problem. We fought the war in Vietnam.
Why? Why did you see it back then?
It was obvious. We fought the war in Vietnam and lost. We forgot to pay for it. We borrowed. We fought the war on poverty. We lost that too.
Right.
And so in 1970, like in 2024, the government debt and the deficits were unsustainably high. Raising the interest rate was politically unpalatable, and raising taxes was politically unpalatable. The only way out of the difficulty was to reduce the net present value of the obligations by depreciating the dollar. Over the decade 1970 to 1980, we devalued the dollar in terms of purchasing power by 85%.
Really?
And the gold price responded, of course, after price controls, by going up, 30 times?
Wow.
But the important part of this is that although the hallmarks were in place, although the government debt and deficits were published as early as 1967, people had lived through 25 pretty benign years in the United States post-World War II. The stock market went up, the interest rate had been going down, the US dollar was doing well, eerily similar to the last 40 years. And despite the fact that people saw inflation, they thought about it as a subject that was taught in school. It took the period 1967 to 1972 for people to understand that inflation was real, that it was impacting their paycheck. The price of gas at the pump went from 20 cents a gallon to $1 a gallon. Hamburgers at McDonald's used to be 5 for $1, 20 cents a hamburger. Then all of a sudden they were 80 cents for a burger as opposed to $1 for 5. That type of thing. It took 5 years for the compound impact of inflation to be felt by the average person. Now, when the average person after 5 years felt it, it was front and center in their consciousness. And if we don't tame the depreciation and the purchasing power of the Australian dollar and the US dollar, there will come a time when the compound impact of that on people's lifestyles will come front and center, the same way it did in the decade of the 70s. It takes time for people to forget good times. It takes time for people to forget bad times. That time hasn't happened, but unless we control inflation, and I don't know how we're going to do that, unless we control government spending.
Well, as I just said to you a moment ago, the budget came down last night, and what are they doing? It's a big spend budget. And we all know, Rick, that when an election's coming up and you've got an election in the US, what do? They splash the cash. So they're not going to rein in spending. It's an election year. Spending will not be reined in. Inflation will not be tamed, even though they like to say it will be. So how do you see that this might play out? Are we going to have potentially social unrest? And I think one of the things I want to really dig into, if you like, Rick, is for all of us out there that are potentially watching this, and some people might be doing it tough. They might be going paycheck to paycheck. What are the little steps that they might be able to take to help them? Because you and I are both of the same view, Rick, and that is we do care about other people.
I read a book when I was 16 years old called Pay Yourself First. And what I learned in that book is that even starting out, you save 10% of every paycheck before tax. You pay yourself first. you forego any pleasure
Yeah.
until you've paid yourself. What you do with the surplus is your own business. If you'd rather pay $4 for a Starbucks than pay 60 cents at home, do it. But do it only after you've paid yourself first. And if there's an emergency, if you have to raid your savings, be your own bank. Loan yourself the money out of savings with a 2-year amortization and 1% a month simple interest.
Okay.
Let's say your car breaks and you
Yeah.
have to buy a new car. You have to buy a car that you can pay off, paying yourself in 2 years at 12% interest.
Okay.
And every month, in addition to paying yourself first, in addition to the 10% that you save off the top, you have to pay off that car loan to yourself. By the way, paying yourself 12% is better than paying the dealer 18%. And you will get a better deal going to the dealer for cash than having them finance it. The point is, pay yourself first, no matter what. That's the first step.
Okay.
You can't get ahead if you are the only one working for you. Your capital has to work for you. And if you don't have any capital, your capital can't work for you.
Yeah.
So pay yourself first. The second thing is invest before you speculate. Now, I got to say, Carrie, I didn't do that. I speculated before I invested, and I got lucky. I worked very hard. But for most people, they can't count on luck. So as you begin to build up enough savings that you can afford to invest, which is to say, after you have 3 months living expenses in cash, begin to invest, not in the penny dreadfuls. You know, buy the Woodsides, buy the BHPs, buy companies that generate substantial free cash flow and are polite enough to give some back to the owners by way of dividend.
Yeah.
Don't invest just for dividends. The companies have to be reinvesting enough in their basic business that they can sustain the dividend. The point is, invest before you speculate. And then you can begin to speculate. Those are the little things that people can do. I don't know about the structure of Australian investing, but investing, if you will, in your own super, to the extent that you can invest either before tax money or that you have vehicles available to you in Australia where you can invest for the long term in some sort of tax sheltered fashion, absolutely do that. We look at our expenses, Carrie. We look at groceries, we look at gas, we look at rent, and we don't think of tax, which is the largest single household expense of almost every working family in the developed world.
Yeah.
Whatever you can do, you can't avoid tax, at least legally, but you can postpone it.
Yes.
And if you postpone tax as a young person for 30 years or 40 years, if that money compounds pre-tax, an unbelievable thing happens to your net worth. A truly unbelievable thing happens. Unfortunately, Carrie, I don't know if people watch too much TV or whatever,
Oh, they
but
do.
too many people that I talk to want to live rich, but they don't want to be rich. In order to make a capitalist society work for you, you got to be a capitalist. In order to be a capitalist, you have to have some capital.
Yeah.
And if you don't save, in American parlance, you ain't going to get it.
Are you, to the audience out there, I really hope you're paying attention. And I hope you're paying attention because I see it all the time. I see it in the shopping malls. I see it in the restaurants. I see people splashing the cash and then saying, you know, I'm living paycheck to paycheck. I don't know how. And look, I'm going to get the haters out there. That's okay. But what we're saying is absolutely right. Pay yourself first, but more important, stop trying to live rich. Stop trying to be like the Joneses. Stop buying the big screen TV because the neighbors have got one. Stop buying the brand new car. Warren Buffett still drives an old jalopy and doesn't have a Tesla or anything fancy Nancy out there because he likes to invest and he invests very well. But as Rick also said, the eighth wonder of the world, in my opinion, is compound interest. Correct. That's what I want you to understand. It's not what they teach you at school. So what Rick has just said is so important to each and every one of you. I don't care where you're listening around the world, whether you're listening in the US, Australia, Timbuktu, the same principles will apply no matter what. And you can have that mindset of I'm living paycheck to paycheck and I can't afford. Never say I can't afford. Everybody can if you actually understand the principles of money is energy and all the rest of it. But Rick, that was really powerful. And I just hope it's not things that they teach us in school. And people want to be like the Joneses. They want to look rich instead of being rich.
I'll tell you a funny anecdote, Carrie. I was driving back in the United States from Canada. I live close to the border. I don't know, 6 weeks ago. And I pulled up to the border, and the border guard said, how long were you out of the United States? I said, 4 days. What were you doing? Oh, I was at an investment conference in Vancouver. And he said, are you an investor? I said, well, I'm retired. I'm sort of an investor. And I drive an old car, an 18-year-old car. And he was trying to be polite about it. But the text was, well, you must be a lousy investor. It's a very modest car. And so it protected me from envy, because I think that same border guard, had he known something about my net worth and my income, might have been somewhat more hostile. But all of a sudden, he felt sorry for me. So living beneath your means makes you less of a target too.
Yeah. All right. Well, look, let's just pull it back if you like, because I thought that is such an important part, and I really want to emphasize to people that you need to wake up, stop doing what you're doing, pay yourself first. So important. And as Rick also said, tax. None of you actually think about tax as being a big expense, but it's one of the biggest ones. But back to gold, back to what we were talking about before. There's a lot of talk at the moment about the BRICS nations, Brazil, Russia, India, China, South Africa, more from the Middle East joining. We've got wars. Do you think that this coming together of certain countries is going to have any impact whatsoever in what's going on?
Of course, but I don't think that what most people think is going to happen is going to happen. The BRICS currency, I think, is a joke.
Mm-hmm.
My friend Doug Casey describes the US dollar as a who owes you nothing. And he says that an I owe you nothing. He says the euro is a who owes you nothing, because there's 17 countries behind it. What in that case is the BRICS? They all have inconvertible currencies. As little as they trust the United States, they trust each other less.
Yeah.
Can you imagine if the Chinese sold the equivalent of $1 trillion worth of stuff to Russia and got paid in rubles? What could they buy for it? That's a lot of vodka.
But aren't they talking about having some sort of a gold-backed currency, and that's how they're going to do it?
They'll never do that.
Yeah.
They'll never do that. A gold-backed currency imposes financial discipline. It gives politicians less power. In your lifetime, Carrie, how many politicians have you known that were striving for less power? The answer to that is none.
Not
the
one.
idea that they would voluntarily relinquish power in order to improve the lives of their citizenry is pure fiction. Zimbabwe now is talking about a gold-backed currency, but they don't have any gold.
No.
What they're talking about is a gold-denominated currency. That's very different. Their currency would be redeemable in gold, just like the US currency was, until it became inconvenient. And then the redemption window would shut.
Yeah.
What will happen is that those countries will reduce the hegemony of the US dollar.
Okay.
The US dollar will become less important, to the extent that the Chinese are willing to take rubles, which really is a function of how much natural gas, how much potash, and how much oil they'd like to buy. They will take rubles. To the extent that the Russians would like to buy cars and steel and computers and stuff, they'll take renminbi. But the idea that they will build up large amounts of the other's currency as a reserve currency is a non-starter.
Yeah.
I mean, it's absolutely a non-starter. Add back South Africa, which is broke.
Totally.
Yes, it'll have an impact, but not the impact that people think it'll have.
By
the way, that's the reason why that's the reason why all those central banks are buying gold. They don't trust us meaning the United States, because we stole $300 billion worth of treasuries from the Russians, and because we weaponized the SWIFT banking system.
Yeah.
The real enemy of the US dollar is located conveniently for Americans in Washington. It's us, not them.
Yeah.
but they still trust us more than they trust each other. And we have the deepest, most liquid, and most transparent securities market and currency market in the world. Those central banks are buying gold because they don't trust us and they don't trust each other. And I think that continues. When it comes to retail buying gold, by the way, retail buying in the West has been negative, which is to say there's been disintermediation, selling of ETFs in the United States and Europe until 17 days ago. The retail investor has been absent. When we get to the point, I should say if we get to the point in the 1970s, where Americans don't trust America either, in other words, where we don't want to save in US 10-year treasuries, then I think you'll see gold really take off. If you accompany central bank buying with retail buying, then a truly strange thing would happen to the gold price.
It's interesting. Now we don't have a lot of time left, Rick, but I do want to ask you this because you're wearing a navy blue shirt, and I can't help but see that it's got a logo on it called Battle Bank. Wonderful name. Just give it, first of all, just an update. Where are you with it? And also, what is Battle Bank?
Let's do what is Battle Bank first.
Yeah.
2020, we formed one of the first online national banks in the United States called EverBank.
That's right.
Branchless, which meant that we didn't have 1.5% in non-interest bearing expenses, and we could pass that money on to the savers, the borrowers, and the shareholders. I don't know about you, Carrie, but I get no benefit from my branch at all. There's a very nice woman there who I'd like to have tea with, but she doesn't know anything about the bank's products or services. And I can have tea at home, thank you. So given that there's no benefit for me out of the branch, why should I pay 150 basis points, 1.5% for it? That was very successful for us. We grew that bank from 0 to $28 billion in 14 years.
Holy moly.
The bank was bought by TIAA-CREF in 2014. They've done a good job making the bank accommodate their customers who are retired teachers in the United States. But the whole range of high quality services that we had with our bank weren't of much use to retired teachers of limited means. So we're recreating EverBank in the form of Battle Bank. The same idea, rather than having 15 saving accounts, we have one.
Good.
Rather than our accounts like Bank of America paying you no interest, we'll pay in the top quartile of interest payers nationwide. We'll pay you interest on your savings account. You can write as many checks as you want. You will be able to save in 18 currencies, not just the US dollar, federally insured.
Love it.
You'll be able to get a CD that's linked to the S&P 500 or to gold. In other words, so-called market-safe CDs, where your principal is protected and you enjoy the upside, part of the upside that you would enjoy if you were invested full risk in those circumstances. We believe that gold and silver is good collateral. So unlike any other bank in the United States, we'll do margin loans against physical gold and silver held in segregated accounts. We know that the audience that supported us at EverBank are interested in gold because we sold them a lot of gold, Carrie. The big difference between now and then is that we started EverBank with no customer backlog, no indication of interest from anybody. We started a bank from scratch. Because we did EverBank and because EverBank abandoned our customers, we have almost 14,000 people on the wait list for EverBank. For Battle Bank.
Yeah.
My suspicion is that when we open the door, especially the deposit door, that the door is going to be blown off. I think we'll grow this bank very, very, very quickly, as quickly as we dare, frankly. I'm almost certain that our ability to attract deposits will exceed our ability to make loans. So initially, we'll have to be invested in fairly low yield securities, but I think the bank will grow extraordinarily fast.
So where are you in terms of, and I'm just speaking to you, I'm an Aussie, I will be seeing you in Boca Raton, but I'm in Australia. Do I care? Am I going to be able to be a customer?
You will not be able to be a customer for the first year of our existence.
Okay.
Because we don't want to concern ourselves with regulatory affairs in Australia when we're caught up with the regulatory morass in America. We will open the doors to Canadians and Americans first.
Okay.
At Everbank, we ultimately were able to have customers from 30 countries over 14 years, and we did a lot of business with Australians and New Zealanders. It's important in particular for Australian business people in the US that have to do currency exchange from US dollars to Australian dollars. If you maintain an Australian dollar account with us, an American dollar account, you can do transfers into your account for no fee, and then you can do currency exchanges between your accounts for 50 basis points. Commonwealth Bank and ANZ would charge you 200 basis points.
Wow.
So
Okay.
we will come in 75% cheaper than the Australian banks will for our customers for US to Australian dollar currency transactions.
Interesting.
I think that'll win us some business in Australia. It did last time.
I think so. And I think you and I better have a conversation when I'm in Boca Raton, because I love this sort of stuff.
I look forward to it.
When are you opening the doors? Have you got an idea?
That's up to the FDIC.
Oh, well, okay.
We're regulated by three agencies in the United States. The toughest is the Office of the Comptroller of Currency, and they approved us in about 100 days.
Right.
The FDIC, I think we're 2 years, 3 months and counting. Now, in some fairness, don't get me wrong, I'm not happy about this. The FDIC is the agency that has to provide over bank failures. They've been a little busy in the last while. Silicon Valley Bank, First Republic Bank. Well, they haven't been apologetic. They have said that our file isn't their number one problem, which I understand.
Well, yeah. Don't get me started on that one. Look, we're running out of time. Let me just say one thing. I can't get him out in person for the Australian Gold Conference this year, but you never know. We might be able to do something. I might twist his arm when I'm in Boca Raton. But just to let all of you out there know, I want you all to go to goldevents.com.au right now. I want you to buy your ticket to the Australian Gold Conference, because you've heard what Rick said. You know, this is a time for you to sit up and take some notice, to understand, to pay yourself first, but also to understand gold is money, everything else is credit. What you've got in your bank at the moment is what we call currency. It is being devalued, even as I speak to Rick right now. So we got lots going on. The Eureka 24, that's free on Monday. You can come after work. We're going to explain how to buy gold and silver, precious metals, panel discussion, and then we're going to have a party afterwards. And that's all sponsored and paid for. So please come along to that. But I guarantee we will sell out for that one. And then on the 27th and 28th, we have the Australian Gold Conference. And that is after Rick's conference in Boca Raton, Florida, at the Boca Raton Resort, which I have to say I was there for the past 2 years. It's a fabulous resort. We do all sorts of things. You will walk past people like Robert Friedland. You'll walk past people like Rick Rule. You'll walk past people like Sean's. There's so many people there. And you'll also see some Australian companies there like Chalice Mining, like Meteoric Resources, like Centaurus Metals. So there is something for everybody, and there is something about going to an event like Rick's and mine where we want and we are passionate about helping you to understand how to not only grow your wealth, but also protect it in these unprecedented times. Rick, I really appreciate your time, but the last word, as always, will go to you.
Well, three things. If you care what I have to say about natural resources, personalize it. Go to ruleinvestmentmedia.com, list your natural resource stocks, including your Aussie stocks. If I know them, I'll rate them 1 to 10. No obligation, no charge. No pot stocks, no tech stocks. Let an old guy do what he does well. No crypto either. Absolutely, positively, come to my conference. If you can't come to Boca Raton, watch it at home on live stream in the comfort and convenience of your own home. If you don't think I gave you your money's worth, tell me. I'll give you your money back. Money back guarantee. But come. Either come to Boca. By the way, have a drink with Carrie on the boat cruise in the Intercoastal Canal. It's an unforgettable experience.
Mm-hmm.
And go to Carrie's conference. Go to the Australian Gold Conference if you're Australian. This is an IQ test. Don't fail.
Yeah.
Learn about gold. Learn about gold stocks. Rub shoulders with people who think like you do. It's a wonderful event. I was maybe as sick as I have ever been in my life when I spoke at your conference before.
Yeah.
I could barely walk down the hill to get there, and I had a ball. if you can have that much fun, as sick as I was, I mean, I wasn't on a walker because I was too vain. I had a ball. If I had fun in that condition, you absolutely are going to have fun in your condition. So as I say, for my Australian friends, this is an IQ test. Please don't fail.
Yeah. And please take action. Don't we think that we always say this, don't we, Rick? Don't sit back and be passive. Take some action. That's how you're going to get ahead these days. Rick Rule, thank you so much for your company. To all of you out there, I will put the links to Rick's conference, to my conference down below. It is always about educating yourself and staying ahead of the pack. Register for any of our events. All the links are below. We'll see you soon. Rick, I look forward to seeing you at a round table next month. It's going to be a lot of fun. Thanks so much for today.
Thank you. Absolutely, Carrie. Thanks for your ongoing support of my conference. Best of luck with your conference.
Cheers, Rick.